Hey, good morning. What I want to talk to you about very quickly and make sure that we are all right with everything that we've done up to this point is you should have completed the test on credit, and now we're going to start the unit on taxes. You should have a handout on taxes. It should say uh, the taxes notes part one, and we'll go ahead and go ahead and get started with that. Taxes are very intimidating to a lot of people and to many people. So we have to give you a basis behind it. It is one of those things when you take a look at it, people are very scared of taxes, and when they're scared of things, they have other people do them for you. If you take a look at your H&R Block as a company uh, that thrives on doing other people's taxes, and they charge at least $35 for each person to do their taxes, and as much as $200 or $300 or $500. Last year, they made in the ballpark of about $900 million on people doing taxes. And what my goal is to give you just a broad overview and touch base with you and give you a little bit of a knowledge about how to do taxes and what's all involved with it. Like I said earlier, taxes are intimidating. People see that as something that's overbearing, stands over the top of them, and is very intimidating to a lot of people when we start to do that, because it's a huge task for some people, and some taxes are very confusing, and you do have to have help with some of them. But in general, most people can do their own taxes. It's very simple to do, but nobody's been taught how to do it. We take a look here. This guy's freaking out because he's doing his taxes. 2 weeks ago when taxes were due on April the 18th, there was a lot of stress, and there's always a lot of stress during the month of April because people have to get their taxes done because it's required by law. This poor guy here, he's not sure what he's going to do. Is Frank seriously begins to seriously question what is worth death or taxes, and again, it's a high stress level, and people are very intimidated, like I said earlier. And the reason they're intimidated is because they get all kinds of forms and stuff in the mail, and if you don't have any knowledge behind it, then you get lost or you get confused. And all these numbers, and what do they all mean? Well, when we take a look at it later on, we'll give you a better idea about what this form is in particular. But it's something that once you understand it and you do it once or twice, it gives you a pretty good idea, and it's much easier to do. The thing that's intimidating about taxes is the tax code is one of the biggest textbooks or biggest books that you'll ever see. It's about 17,000 pages. It's bigger than the largest novel that's ever been written, which was War and Peace. And it's just something that's really over intimidating to a lot of people, and a lot of in the tax code doesn't even reflect to the common person. A lot of business people and a lot of people who try to bend the rules a little bit use the tax code to their ability. However, a lot of like I said earlier, a lot of the everyday people who don't have to worry about all the in-depth stuff that goes on in the tax code. So we're going to quickly go through a bunch of different things: who pays taxes, how are they determined, when do you pay taxes, what do they pay for. Um, so what are taxes? Taxes are simply that. It's an amount that's demanded by the government that you must pay. And that's just in sense, that's what it is. You go to the store and you buy something from the store, you got to pay a sales tax. And what's interesting about a sales tax is actually sales taxes are not charged to the individual, they're actually charged to the business. But because the business provides this good for you, they charge you the sales tax that the business has to pay. So taxes are simply that. And who pays the taxes? Taxes are paid by the taxpayer. And they pay it at not only the federal level, but also the state level. And also, if you live in the city of St. Louis, you also pay a city tax. And sometimes there's township taxes as well. So you have to be cognizant of what taxes are out there and what you pay for. Are you a taxpayer? Sure you are. Even if you don't have a job, you're still paying taxes. When you go and you buy that Slurpee at 7-Eleven, or you go to McDonald's and you buy something there, you're paying sales tax, and therefore you're a taxpayer. Tax liability. Now, the term liability is simply an accounting term that is used to say that something is owed to somebody. So when I have a liability towards somebody, I borrowed money from somebody, I owe money to that person, that's a liability. Tax liability is just simply that. It is the amount of money that is paid or owed to the government or to whatever agency that I owe it to. So tax liability means it's the total amount of taxes that are owed. Now, what do taxes pay for? Well, taxes pay for a community, and communities can be the United States, so we pay federal taxes that way. We pay state taxes to cover the things that are in the state. We cover county taxes for the county of St. Louis County. And if you live in the city, you pay a city's tax too. So taxes are paid by this community who all have a common interest or common concern for the good for that area and that community. What are the benefits that come from that? Man, they come from all kinds of different ways. Taxes pay for roads. They pay for public schools. They pay for libraries. They pay for police departments and fire departments. They pay for the military and the national security. They pay for parks and recreation. Now, what else do they pay for? Well, we said roads, but if you think about it, Bi-State here in St. Louis, that's a public entity, so that's paid for by the taxpayers. Metrolink is the same way. Sometimes in certain areas, taxes pay for things that are used by the public good. So those are just 4 or 5 things, but again, you want to think about Metrolink, you want to think about Bi-State. They travel all over and throughout the St. Louis area, both in the county and the city. Those are things that are all paid for by tax dollars. One other benefit of taxes is Social Security, which we'll talk about in just a second. But when you pay your federal taxes, okay, it is broken up into 2 parts, and those taxes, Social Security is a benefit plan that when you hit a certain age, you are able to receive money from the government. Well, if you look here, roughly in 2014, the average Social Security payout per month was about $1,300. And that means that when you hit a certain age, 65 or older, the government writes you a check every month for $1,300 to help support you as you live. Now, there's other things obviously that are dealt with Social Security, but we'll get back to that in just a couple of minutes. How do you pay taxes? Well, taxes are paid by a bunch of different ways, and we'll talk about these 5 here. But income tax is one tax that you pay. Payroll tax is another tax that you pay when you get a paycheck every 2 weeks or every month. You have to pay taxes on that paycheck. Property taxes are the same way. When we pay property tax, we have to make sure that stuff like real estate and cars and whatnot. Sales tax we kind of covered just very quickly just a second ago. We'll get back and talk about that. The last one is excise tax. So when we pay an excise tax, it's also the same thing. Now, income tax is the biggest. It is the biggest form of income for the government. Like I said, it's the biggest form of income for the government, so it's based on everybody's income. So income tax is broken up in a bunch of different parts. But if you look at Floyd Mayweather here, made $105 million in 2014. He has to pay taxes on that. Something else that you may not know about is baseball players. The ace pitcher price for the Red Sox made what was it, $217 million. He signed a contract for $217 million, but he's got to pay taxes on that. Now, the thing about baseball players is when they move from city to city, if it's in a different state, then they've also got to pay the state taxes on that. So when the Cardinals go to Chicago, they have to pay for Illinois income tax, and when they go to Pittsburgh, in Pennsylvania, they have to pay for the Pennsylvania taxes. Boston, the same way. You know, when they go out to California or Colorado or Arizona or Florida, they have to pay taxes in each of those states because that's their income. Income tax is based in 2 sections: earned and unearned income. Earned income is simply that. It's the amount of paychecks that you get every month, every 2 weeks, whatever. It's the amount of money that you get paid for your job that you do. Unearned income is a little bit different. If we take a look at these 2 people, the Hill family here, they won $293 million in the Missouri Lottery Powerball. Well, that's great, but that's unearned income, and they roughly have to pay half of that amount to taxes. Now, you also see in the afternoons during the summer, maybe you flip on and you look at the Price is Right. This woman won a brand new car. Well, the thing about it is these people have to pay taxes on the things that they win. They get so excited about that. But guess who's waiting on the sidelines for them is the IRS. Okay, and they have to pay taxes on the goods that they earn there. So Unearned is things that you earn other than your employment. That can also include interest earned on savings accounts. So when we talk about earned and unearned income, that's the stuff that's taxed, and the government, again, that's the biggest amount of money that they make from that. Now, com- uh, components of income tax are broken up into three parts. The federal government gets a piece of it. The state government gets a piece of your income, and if you live in the city also gets a piece of that income, and that's what they categorize as income tax. So it's actually broken up into three different parts. Federal income tax is the taxes that you pay to the federal government. Now, it's based on the amount of, we said earlier, the amount of money that's earned and unearned. Okay, the more money you make, the higher in taxes you pay, or the more taxes you pay. The majority of people who live in the United States have to pay taxes. If you live in Europe and you work in the United States, you still have to pay taxes here in the United States, and you also pay in Europe. So it's the majority of people who live here in the United States. However, if you make less than a certain amount of money every year, then you don't necessarily have to pay federal income tax. It covers, and what does it help fund? It funds the operations of the federal government. Okay, education, defense, those tornadoes that hit just a couple days down in Texas, it helps support disaster relief. State income tax is basically the same thing. Okay, it's based on the amount of money you earn and unearned income. The more money you make, the more taxes you have to pay. It's paid by anybody who works and lives in the state of Missouri. So again, those baseball players who come here, when the Colorado players come to St. Louis, they have to pay a state income tax because they made that money there. Not all states have income tax. The state of Florida doesn't, which sounds like a great, let's all move to Florida so we don't have to pay state income tax. However, the sales tax and the stuff that you buy down there is much, much higher than anywhere else in the United States. So they have to offset that tax somewhere else. So they have a higher sales tax. What does it help? Well, it varies from state to state. Right, state highways, operations, the government pays the federal employees, or I'm sorry, the state employees and whatnot. So that's our state income tax. Now, payroll tax is the tax that you have to pay on every paycheck that you get. The two big sections of it is Social Security and Medicare. And if you remember last unit, we talked about FICA. Well, this is different. This is FICA. FICA stands for the Federal Insurance Contributions Act. And what that basically is it's saying that every person who gets Social Security or who gets Medicare at the age of 65 or older has to pay into it while they have a job. Okay, and so payroll taxes are determined. It's set on certain percentage. Social Security pays a certain percentage. Medicare pays a certain percentage, no matter on how much you earn. Okay, it's deducted out of every paycheck except for self-employed, and self-employed is a whole different situation. If we had more time, we would talk about that. Paid by individuals who earn income working for pay. Okay, and actually the employers make that as well. And so you need to be aware that this is how this works. Is if I pay $100 on my Social Security when I get my paycheck, and I pay $100 to Social Security, then my boss has to pay $100 to Social Security as well. And that's the big discussion right now. Is that fair to the small business owner? So it's based on a percentage, and it's paid for by the worker and the employer. What does it help fund? Well, it helps fund those two programs, Social Security and Medicare. Social Security is just simply this. Okay, it's money that helps pay for retirees. Social Security is a socialized retirement program, meaning that when you hit the age of 65, if you've paid into Social Security your whole life, then you will get a paycheck every month from Social Security that helps you support yourself after you retire. It also helps people with disabilities, people who have lost parents, a person with children who's experienced a spousal death. So if there's other reasons that people get Social Security, but the biggest payout for Social Security is for the people who retire. It is now 4.2%. It used to be 6.2, but so for everybody who gets deducted from their paycheck gets deducted 4.2%. Up to an annual maximum, and that annual maximum in 2015 was $118. So if I make $120,000, I'm going to pay almost the whole year Social Security. But once I hit $118,500, I don't have to pay Social Security anymore, and neither does my boss. If I make $300,000 a year, I pay up to $118,000. So when I continue to keep track of how much I make all year long, and when I hit $118,500, my boss doesn't have to pay that anymore, neither do I. So I stop paying Social Security. Medicare is the same thing on the other side. It's just simply a health insurance plan, a socialized health insurance plan. It helps pay for health care for senior citizens, okay, and it's based on a standard rate again. Okay, this one though, unlike the 118,000, there is no limit. You pay that all year round. You pay that, as long as you're making money, you're paying that to Medicare. So when we talk about federal, or when we talk about payroll taxes, the two taxes that you have to know about are Social Security, which is the socialized retirement program, helps pay for retirement, and Medicare, which is the socialized medical program that helps pay for when you're sick and you can't afford things as you get older. Just a quick example again, I say that the employee, so if I pay $100 in there, my employer has to pay $100 in there, so the government gets $200 every payroll from that. And there's a lot of discussion about should the employer have to pay just as much as the employee. Well, currently they do. And so small business owners, if you pay, when you pay your employees, your workers, you have to match that amount to pay into the Social Security and Medicare programs. Okay, so we're going to skip over this because we're going to move right into property tax, and property tax is just simply that. It's a tax on property such as land and buildings, including homes and motor vehicles. So when you, every year, your parents get a thing in the mail, a sheet in the mail that says, hey, what do you own as far as property right now? What car do you own? What are the boats that you own and whatnot? So we take a quick look at this. This is a Nissan Altima, and it's based on assessed value. And they say, well, how old is the car? And then the government says, well, here's what I think we should assess this at. Okay, so they say the assessed tax and license fees $436 and $26 for that, and then they break that down. They give you an amount that they say that you should have to pay on that personal property tax. So when we talk about this, every year you get a personal property bill in the mail, and this person has to write a check for $218.14. So based on their personal property, and that is just a way in which the state government keeps a running tab or keeps a income flow into the state government based on property taxes. How's it determined? Percentage of property value. So you figure out what a car is worth, and then they say cars are taxed at this percentage rate, and so it's a percentage of the property values. How homes are done the same way, and so it varies depending on where you live. Property taxes in Ladue and Frontenac are much higher than the property taxes in somebody who lives in Columbia, Missouri. It's paid by the property owners. For example, when you go and you get your car, you go get your license plate for your car. If you haven't paid your property tax for that year, then you can't get a new license plate, and so you're driving a car illegally. What does it help fund? It all helps fund all kinds of stuff. Oops, sorry. Schools and expenses for the state and local government. So it is the property tax that everybody has to pay on their property each year. They pay property tax on homes and cars. Sales tax, you already know this. And sales tax is that tax that is based on the purchase of goods and services. So you go into a store, you buy something, right, is based on a percentage, and it varies from area to area. When you live in the city, you pay a sales tax for the local township, but you also pay for the city or the city tax as well. But if you go and you cross the street into the county, then the taxes change. So it's simply that. If you have $1 and you're charged a certain tax on it, then you pay the whole amount, paid for by anyone who buys or purchases the items, right? And what does it pay for? Again, it pays for the expenses for the state and local governments. It is again a income flow to the government so that people can afford, so the government can afford to do different types of things, from disaster relief to payment of employees. And yes, we have a state sales tax. Excise tax, or the last tax we're going to kind of talk about, excise tax. That is a tax that's based on a certain good. Okay, when you go and you buy an airplane ticket, there's an excise tax, and an excise tax, or what they call a sin tax, and there's a reason why they call it a sin tax, but we won't get into that right now. But it's taxes that are collected from the seller or retailer for for a specific good is what I'm trying to say. So there's excise taxes on alcohol, tobacco, airplanes, gasoline, different types of smaller items, and it's based on basically on the purchase of the. Oh yeah, I forgot hotel rooms. So it's on the purchase of that. So each of these 5 here have a different percentage of tax that's based on. When you buy cigarettes or you buy airplane tickets, there's a tax that's taxed onto the back end of that. It's paid for by the person who purchases the item. Okay, it varies from state to state, and it basically, again, it covers the expenses for the state and local governments. So just remember that an excise tax is a tax that's specific towards a certain good. Taxes on wealth. Last one, the last section that we need to cover here before we're done today. Wealth is this. When you go and you pass away, the last thing the government does is they step in and they say, hey, we're going to tax you one more time, and that's called an estate tax. So this is the last tax that they can get you on. Even though you passed away, you have to pay taxes on the estate that you have. So it's a federal tax collected on the value of the person's property at the time of his or her death. Now, people were trying to be smart, and what they tried to do is they say, well, you know what? I'm going to make my estate worth absolutely nothing. I'm going to give all my money away. I'm going to have my children or my other family members inherit the money to me. And the government stepped in and goes, no, you can't do that. So what we're going to do is we're going to create what's called an inheritance tax. So that inheritance tax is a state tax that's based on if you inherit money from a family member, they tax you on that. So people try to keep their money to give it to their relatives, and now the government stepped in and did that. Well, then they said, well, maybe I'll do this instead of me giving them the money after I pass away, I'll give it to them now. I'll gift it to them. Well, what did the government do? They stepped in one more time, and they created what was called a gift tax. That gift tax is basically saying that, hey, you know what? I can't give anybody over $11,000 a year without them getting taxed on it. So I can give them $10,000 for the next 10 years if I wanted to, but if I give them $11,000, then they're going to get what's called a gift tax on it. Now, you can, if you're sick or if you're earmarking, which means you're giving money for specific things. It says down here, gifts of any amount for education or medical expenses are not subject to the gift tax. So you can gift that, and you can say, hey, you know what, when I get sick, this is for medical expenses, or this is for my niece's education down the road, so they won't get taxed on that as well. And obviously there's loopholes or there's ways around that. Last thing that you need to know, the IRS. The IRS is what's considered the police department of taxes. They keep track of and make sure you pay your taxes, make sure they're paid on time, make sure you pay the right amount, okay? And so they make sure that you and your employer do what you're supposed to as far as tax-wise. The IRS isn't responsible for a whole bunch of things, but you just need to know that they're the police department of taxes. Audit then is the last thing, and so if you mess your taxes up, you get called down to the IRS, and they basically say, hey, here's the thing, we're going to audit you, we're going to look at all your taxes, we're going to make sure everything's right, because we don't think that there's this mistake, and you've got to prove to us that you've done the right thing. Okay, so that concludes it for the day. We will come back next week, and we'll continue to talk about how we calculate taxes.